Today, we're going to be discussing the SpaceX IPO, which is currently set for June 12th. They recently released their S1 with the SEC, which allows us to do analysis on their financial statements and company mission, things of that nature. So I had Claude compile these financial statements into metrics and business units so that we can accurately discuss the upcoming IPO. So first off, you see from a high level, their base case revenues are in the 35 billion range and their target market cap is around 1.75 trillion, which some estimate this will increase to the $2 trillion range post IPO. And this would put them at least a 50x price earnings ratio, which is around 5 times the average for the top 10 companies in the S&P. But let's dive further into each business unit and why it's priced at this range. So you can see here, SpaceX is obviously what we know as their launch company, deploying rockets into space with satellites, which is their Starlink business, as well as other payloads for various organizations. But last year, they did around $4 billion in revenue. And this year, they're expected to do 4.5. And one thing to note is that this year or next year, it's expected that SpaceX will launch more payloads into orbit than the rest of the world combined. And that, combined with their mission success rate, is a good indicator of the longevity for this company. Starlink has been their main revenue provider at around $11.5 billion. And this is expected to grow at about 50% and the goal of this company is to eventually supply the global and potentially multi-planetary internet. You can see they're currently sitting at 10 million subscribers. And personally, I think this number is going to go parabolic in the next 5 years. Now, XAI and Grok is where a lot of their CapEx or expenditures are going. So this is their loss leader for sure. In the last year or two, I believe they've put over $12 billion invested into this company. And it's currently only generating 300 million in revenue, with 200 of that being a contract from the Pentagon. Now, revenues for 2026 are expected to go a lot higher towards a $9 billion range, as Anthropic recently signed over a $1 billion per month contract to use the Colossus supercomputer. Furthermore, X is currently doing around $3 billion in revenue per year and is expected to grow a little bit, but stay in that range. This is probably one of the least important assets of the business, although it does provide a lot of the data that XAI eventually trains on. However, recently Elon has tried to partner with Cursor to allow the sharing of the Colossus 2 supercomputer for Cursor to have compute and provide SpaceX with the AI editor necessary to leverage that data. Now, the best case scenario for this is that Cursor agrees to an acquisition of 60 billion, which would be 30x of their current ARR, but 10x what their expectation is to have by the end of the year. So the base case expectation that I would say is even if Cursor doesn't end up getting acquired by SpaceX, there would likely be a partnership involving compute rentals, similar to Anthropic, where Cursor would pay a fixed amount per month to leverage the supercomputer. And it really depends on how fast Cursor's revenue grows, but it's really hard to tell what the base case is for Cursor. So that would drastically change the value of the IPO. Now, I have heard some people like Chamath Palihapitiya mentioning that the Cursor deal is essentially done. However, I don't think any of this information is public yet. So this would be the icing on top that really justifies the IPO price. Now, why I say that is, as you can see here, SpaceX falls at the very bottom of the list of top 10 S&P companies when it comes to revenues. And this is their 2026 projected compared to most other companies' 2025 actuals. However, on the market cap side of things, they fall closer to 6 or 7 on the list. And as I mentioned earlier, some analysts expect this to jump closer to the 2 trillion mark post IPO. So if you take a second and you just look at what the actual revenues are for these companies compared to the market cap, you can tell SpaceX has a lot of their future growth already baked in to their IPO price, which in the near term, 1 to 3 years, I believe they will justify that valuation. However, from that point on will be the real determinant of if this is a good investment or not. So you can see here's a table of the top 10 companies with SpaceX included from a market cap perspective. And I like this because it displays their price to sales. And you can see most of these companies probably fall on average around 10x, with SpaceX being the outlier at 50x. So I'm going to reiterate, this is not a justification of whether or not to invest in the IPO. This is simply meant to be informational and an analysis of what the current business is, as well as how it stacks up to other comparable companies on a market cap perspective. All that being said, as I've done more research into SpaceX and their different business units, I'm really curious to see how these next few years play out and whether or not this market cap is justifiable. Thanks for watching. If you enjoyed the video, please do me a favor and like and subscribe. I hope you find this as informative and fascinating as I do. And until next time.